Shall I throw a pip on the bobby for you? Ripper. Hey, good morning. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of your results. Stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Freddie Boy even likes the on-hold music that we choose here at Forex.Today while he waited for the webinar. Right on, Freddie Boy. And how do you do you? Yo. Hi, my name is Wayne. I'm a currency trader just like you. I'm a few years ahead, so I thought I would blaze a trail to your success, maybe even drag you kicking and screaming to the promised land. Please visit TradersWay.com and open an account. What can I say? Let's cut to the chase. I'm trying to earn your loyalty and respect on behalf of the firm. Hopefully you give us an opportunity to earn your business as well. We do these sessions 7:30 a.m. Monday through Friday here at Forex.Today. First Friday of the month, I'm also at FX Street for Trade Non-Farm Payrolls Live. I've been doing that webinar for 11.5 years. So I've been around for a while, and I am happy to help. So I can go through my charts, but you should ask questions and get what you need to succeed, okay? Yeah, here for Fridays too, Pete. What else would I be doing? Golfing? I'm here every day at Forex.Today, except non-farm payrolls. Okay? Every day is a day to trade. All right. So, let's start with gold. We were range bound. Now, I don't remember if we talked about this commodity or some other currency, but we talked about how to trade a range recently. And the range we have already identified, but we, whether it was here or somewhere else, we had a range, right? Kind of set. There's a high and a low. And didn't we discuss trading a breakout by letting it break, catching a retracement? And you can see in here, this would be that zone. I don't know if we actually talked about this as a trade yesterday, because even though the role reversal is here, I guess let me mark it with red. The role reversal is here. This is where you'd look to get long, but you're at the top anyway, so there's not a lot of meat on the bones, right? And you notice we finally actually made it to the next area, and that's where you're always supposed to take profit. Okay? And notice how we went up there and we tickled it and it stopped to the penny. Isn't that neat? Oh, hey, do you watch, guys? I noticed a few people asked about the watch. I got the rubber band on today. I just put it on for the first time. So I took the bands off. The pins are ceramic. I'm like, now that's impressive. I'm like, ceramic pins! Woo! Nice. So, if you're a watch guy, there you go. No, I was truly impressed with the pins, though. I'm like, watch pins. I'm like, ceramic watch pins. All right. So, here's something very similar. What is this? Oh, the peso. This is pretty similar. Look, The same analysis applies. No, Daniel, no, no. Okay, look at that. It's funny, huh? That's the analysis from gold. Hey, yeah. Isn't that funny? So look at gold, though. Gold, or not gold, sorry, peso. It broke out and immediately retraced back in. Now remember, that red zone was plotted right there. Isn't that neat? Yeah, Peter's like, isn't it brittle? Yeah, yeah. I mean, honestly, I didn't expect it. I just expected regular pins. So that's why. And they're because you can change the band from the leather to the rubber diving band. They unscrew, so they give you a screwdriver. I don't have it here. They give you a pennerized screwdriver, and you can unscrew them and screw them in. And it's interesting because it's ceramic. They don't strip them. You can easily strip those little screws. They don't strip, which is, I think, I'm like, oh, I mean, it's actually interesting if you like watches. But anyways, look at this target. This was designed through algorithm, if you will, through mathematics, looking at the high, low, and close divided by 3 and some other things. But it's just math. It has nothing to do with what people are thinking or feeling in their heart. It has nothing to do with greed and fear. It's just math, right? And look at this. Same thing the week before. The math, nothing else, but the math says this whole area in here is a take profit zone. Oh, look, somebody took profit. Here, the math says this is a take profit zone. Oh, look, they took profit. It's logical and intelligent. Maybe even sentient, right? Isn't that interesting? That the math makes people do things, not the other way around. We work for the math. People took profit simply because the math told them to. No other logical reason. I think that's cool because if you can learn the formula, so to speak, then you know what people are going to do before they actually do it, which gives you an advantage, doesn't it? Look at this. The math says get out. So what did people do? They got out. The math says get out. So people got out. The math says get out. So the people said get out. Or so the people got out. Isn't that interesting? Weekly central was the low. Weekly central was almost the low. Weekly central is the low. Well, there's a lot of coincidences. Okay. Cool. But no opportunity to trade. It's right, Nuno, yeah. Lots of coincidences there. So anyways, ignore peso, pay attention to gold. Look at our USD yen. Okay, you ready? 100% retracement predicts the lower high off the left shoulder. Lower low predicts the new lower high. Lower low predicts the new lower high. This is a reset. Then lower low, this predicts the new lower high. And Now we're sort of maybe consolidating. It better make a lower low if it's going to stay in the channel. Well, and if it doesn't, that's also important information. If it does this, that'll be also important information. A lot of yen pairs have hit their bearish weekly targets. Yeah. Which tells you the dollar is still strong. The yen is stronger, or as they say in France, stronger. Right? Would we expect a retracement, but strong and well, you know, it's funny. I don't expect anything ever. So it's funny every time people ask questions like that. I'm like, expect? I don't expect anything. Right? Hang on. I'm gonna make the chat a little bit bigger. Well, there's only so like I don't expect anything, but let's do it this way. Let me change colors in the drawing tool. If you're a bull, you're going to try to take it off the bottom of the range, and you're going to try to take it here. Okay? If you're a bear and you get knocked out, you're probably going to get knocked out for profit, right? So where would you try to sell again? Here or here? Okay? So like, which one do I expect? I don't expect anything. I don't know, right? But if price returns to this area, I wouldn't be shocked if it turns bearish again. That's helpful information. How about fxbootcamp.com, John? That's all right. Yeah, Peter's like, yeah, that's a good way of putting it. And I constantly tell myself it's that, you know, I'm not trying to guess at what the market's going to do or try to figure out what the market's going to do. So when you say, do you expect it to do something, then you're trying to figure it out. I'm not trying to figure it out. So I'll tell you what I'm going to do. If price retraces up into this yellow zone, I'm going to look to sell if the market turns bearish. Is it going to do it? Do I expect it to do it? I don't know. Okay. I just know if I'm up there, what I'm going to look for. And the reason for it, in simple terms, you know, and I'm not looking at any higher time frame, but to me, it's just a retracement. Okay. So if it goes up there, I'm going to expect a retracement, and if I see it roll over in conjunction with a potential weekly swing, yeah, I'll probably look to short, and it'll probably be a swing trade that ideally lasts till next week. But before I make such a decision, I also have to look this way and see what else is going on the higher time frame to that side. Okay? So right now I got other questions going on, like, is it going to do this? That's what it's supposed to do according to the people that started shorting here. Okay? So I think this is even more likely to happen. So if I had to answer your question the way you asked it, do I expect it to head up into here? No, what I expect it to do is this. Do you know why I expect that? Because I don't expect it to reverse. The way I think is if it's in a trend, it's going to stay in the trend forever and ever 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 until it reverses. So a reversal would be more like this. Okay? But I don't expect that. I expect the trend to continue. Because I don't want to bet against the trend. I don't want to say, I bet you this trend is going to end. I expect this to go up even though it's in a downtrend. You got to really stop thinking that way if that is how you're thinking. I'm not suggesting you are. But we all do at some point. And I bet you've been burned by a trend. The trend is your friend until she betrays you, stabs you in the back, takes your children in the middle of the night, throws them in your pickup, and is gone forever. Just saying. John, the best way is to write a contract with yourself. Yeah, no, that's right. That's fine, Peter. Right. What the counter trend thing is to write it down on a piece of paper. In my book, I suggest you actually use a stinky permanent felt tip marker. I actually want you to smell it. I want you to hear it as you write, squeak, 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 squeak. And you say things like USD yen bear or something. And you write a contract. And it's based maybe on like your 4-hour analysis only. And you put it up in front of you so you can see it, you heard it, you smelt it, everything when you wrote this contract with yourself, which emotionally you cannot break a contract, that's right. And you only, in that case, sell. Okay? You know, and I would, if you worked for me, I would make you do that. I'd want you to write it and write me a contract. Like, so what are you on this USD yen? Are you a bull or a bear? And you're like, well, you know, we're in a 4-hour downtrend, so I'm a bear. Put it in writing. If you buy this thing, you're fired. How about that, John? And by the way, there's no elevator down for those who are fired, right? The elevators for profitable traders on the team. There's only one way. There's only one way out of the building if you're a losing trader. Yeah, out the window. How about death apples? Yeah. And a lot of people that have been around me a long time know that there's also a suit of shame. So let's say you and I, I'm the senior trader. And you and I have a conversation about your trading history, and we review things. And we notice that often you can counter trend trade, and we both agree that you're not going to do this anymore because we can tell just looking at the stats that this is a drawdown scenario for you. So we write an agreement together that you will no longer counter trend trade based on whatever definition of counter trend. So like on a 4-hour chart, if it's bearish and you're longing, great. All right, fine. So when I find out, we will have overalls in the office, the kind that a fighter pilot would wear or a mechanic would wear, you know, a one-piece suit. You put your feet in and you pull it up over your shoulders and you zip it all the way up, right? So you can put it up over your clothes. and it would be bright yellow, like you just busted out of a maximum security prison, or orange, I should say. And it's the suit of shame, and you would have to wear that for the rest of like a whole month solid. So you'd come to the office, you got your nice, beautiful suit on. Yeah, Guantanamo suit. You have your $1,000 suit on, your 7-fold silk tie, and you're chatting with the other traders and getting your coffee, and everything's great in the morning. And then, before you start trading, you walk over and you have to put the suit of shame on. And for the rest of the day, you're walking through the office, and you have to do this for a month. And everybody knows that you are a crap trader, and there's a reason for it. And you will be publicly humiliated. And you will stop counter trend trading, John. And fast. And then at the end of the day, you can take the suit off, right? You're not invited for drinks, of course. You'll have to, right? But after a month, if you're not counter trend trading anymore, you don't have to wear the suit of shame anymore. If you're still counter trend trading, despite the public humiliation, I'm pushing you out the window after I get my suit of shame back. And then the problem's going to be solved one way or the other. So that's how I would do it, John. Okay, we're talking about triangles here now. So you're going way big. Well, Tomek, I'm not going to say yes or no, because at the end of the day, it's going to be subjective. I'm not a big shape guy. I much more prefer just horizontal support and resistance. So I don't get caught up into, very much, talking about the apex and all this kind of stuff, right? But so I like to just draw horizontal support and resistance like this, right? So you're marking it up as a triangle and all that kind of stuff. But I'll tell you, if it is going to go up based on monthly pivots, it's probably going to be this lower one. So this is telling me like this heads down to 109. Maybe 108. Okay. And then I'll probably look to get long. Well, not probably. I will look to get long. So I'm going to give this a week or two. Okay. And maybe be able to buy it down here. 108, 109. Okay. And just treat it that way. I might not trade the USD yen at all, but that's the general idea. I may trade a different yen pair. Okay. You are the 1, 2, 3, 4, 5. All right, I guess we should do kitty cat. 1 hour. Do you agree with this channel? Cool. Just reviewing the price action. I don't remember doing this, but clearly we were doing this. Unless I did it for myself. I don't know. But, okay, higher high. Up here, you take the previous high, you drag it across. Your buy zone is going to be about here. New higher high, you take that old high, drag it across. This is your new buy zone, so on and so forth. And why do I have my channel drawn like this? essentially two channels. Any idea why? Yeah, well, I'm measuring the strength or the speed or whatever, because if we're trading down here, let's say it's an uptrend, but it's sort of like a cold uptrend, lukewarm. If we're trading up here, it's a hot uptrend. Okay? Right now it's still pretty hot, but it might be slowing down. I mean, you can almost draw, oops, you can almost draw a like a midpoint on here too, couldn't you? Oops, that's not quite straight, but okay. Couldn't you? Well, it's not a pitchfork, but the pitchfork's in the basic training program. So yeah, so it might be cooling off, right? And therefore, if it cools off, it's going to drop into here, and then eventually something like that. Okay. Now, if I'm drawing a pitchfork, I'd do it a little bit different. And the thing with the pitchfork, I adjust my pitchforks all the time. So like, let's say that's the current low, and then we get a high, and then this is the newer low. I draw it like that, but this high never changes. So every time it makes a new low, I adjust. Makes a new low, I adjust. Okay. You can see it's not amazing. So that's why it might just be me. Maybe I'm not very good at them. So that's how I do it. I adjust, I adjust, I adjust. And if it made a new higher high, then I have to adjust that. I would move that, except it won't let me. Okay. Okay. So if this comes down, then you'd move this, adjust that high to that, right, to the current low. I got too much going on now. So I think that's how I would have it here. And then if it heads up, then I would need to move this bottom, and I would adjust to that low. And then if it made a new high and rolled over, I would adjust again. It's too much work. Okay. So I just do things like, oh, this is a buy zone. Somewhere between there and here. Right? Something like that on that time frame. It's so the same. Only the trades will change every day. So I was up 100 pips. Yeah. Got some sensitive things going on over there, Pete. So we'll see. Yeah, looks like it's going to come up for several hours. Somebody bought it at 17. They're hell bent on driving it back into 18. You can also see that the trend is quite slow. This is quite range bound still, I believe. This says it could be up for a day. So I don't know. I'm sick of rabbit stew. So, you know, I was up 100 pips, so I'm not going to take profit. Can't lose money, so might as well try to make money. Did you hit it, Kareem? I know what you mean, but oh, down there. Yeah. So, did you get it? Yeah. Now, why would you put it at six? You know, at like 5 pips below support? Why wouldn't you put it 5 pips above support? Because you also have to collect your spread. So now you're really talking 92. Seems a little odd to me. Oh, well, there you go. See, I wouldn't play it that way, but, you know, to each his own. I wouldn't play it because it's a pivot. I'd play it because it's a psych level. The pivot only confirms. Not everybody uses pivots, but everybody can see the psych level of 117.0000000000000 and fibbed it. That's subjective, right? So, anyways, nice trade. So what you gonna do? What you gonna do? Got a pocket full of pips. Some of our homeboys do too. Trading all night, selling euro. Sipping on Rockstar juice. My mind on my money and my money on my mind. No, I'm just saying, just be careful, right? Put things in order. See, I don't think so mechanically. I don't put my stop on the pivot. If I was worried about the pivot, if I'm short, I need to have my limit above because it's got to dip below to catch the spread. So therefore, if I want to get out exactly at the pivot, then my limit's going to be above the pivot. So on and so forth, right? You know, the other day, Peter, I was up at 3:45 in the morning. So you see these headphones? They're waterproof. So I can listen to Bloomberg in the middle of the night while showering and not wake up my wife and kids. Because I have speakers in the shower so that if it's daytime, right? If it's daytime, I listen to Bloomberg in the shower through my speakers. So either way, I'm always in tune. I don't waste time. I do take 45-minute showers every day because I meditate as well. I'm what you call an idiot, savant. So yeah, I wouldn't do this in a range. You don't use fibs in the range. So anyways, we'll pay attention to that. All right, so pig's got to do its thing, blah, blah, blah. Yeah, so, boy, did I do a good job getting out of this, huh? I got out right in there, as you guys know. You saw me. We moved the stops and everything together. 786 is a moment of truth, right? But it's a little too far. Even if it does go up, it's enough to have scared me. And so, you know, let's say it went up from here. I don't. It doesn't have to, and I don't think it will. But let's say it did go up from here. That the 786 acted as support. I still now, as we talked about the other day, need to play this area, or at least pay attention to this area as a possible head and shoulders. I think it'll do this, but anyways. It's not perfect because it's not perfect, but nonetheless, with nothing else being said, this in of itself predicts something like this. Or something like this. So this seems pretty reasonably the same. Okay, and if you're a professional trader, your job is to recognize this risk and manage that risk for you, right? OPP, other people's pips. Otherwise known as an opium trader, other people's money. OPP, yeah, you know me. 'Just cleaning up my charts for you. That's a very, 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 very interesting area, isn't it? Projected bottom, double bottom, monthly central pivot. $200's lagging, which just tells me this is going to move sideways for a while. Let the 200 catch up, and then, right? So it might be sideways the rest of the week kind of thing. And just let the EMAs catch up. Okay. So maybe something more like What do you think? You want to talk about the ECB? What are they trying to do? Because of the 21 and because it's not a 3-wave correction completed yet? Right. All right. So the ECB is trying to create inflation. Do they have inflation? Right. So I don't believe Draghi's in a situation where he can taper. Yeah. Not this year. I think the Fed tapers their balance sheet, but the ECB doesn't taper their quantitative easing. Right. So I think that's what's going down. I think the market hopes too much. They're right. And a lot of this euro strength really should be based off of investment opportunities into real companies, into real assets, not treasuries. Okay, so I think it's overdone. Sure. So, like, do you remember right after the Trump election, the market went nuts because, in a good way, because Trump was elected? We're laughing, or at least I was laughing. Like, I mean, I don't know. We were laughing. I was laughing because it's laughable to think, yeah, of a new president, and even if they want to institute policies of tax reform, reduction in regulatory requirements, even if he's going to invest $1 trillion or she's going to invest $1 trillion into shovel-ready projects, even if all of that was true and capable, it would still take years at best. And it was quite laughable that the market reacted the way it reacted. Does anybody remember having multiple conversations like this where I'm literally laughing? We discussed how stupid it is, and that it would take years at best to see any of that hit the real economy, right? And now I think the world has woken up to that fact. Now, it went from November to July and now August, right? But it kind of started creeping in more like July. But it's just like, holy smokes, eh? I mean, we're a good 6-7 months ahead of the herd, but whatever. So we'll see what happens next. I do think the dollar can weaken. But maybe this weakening is also overblown. And I'm very interested and intrigued about what happens next. Can Draghi just sit and let this happen? Just sit and let the euro appreciate and appreciate and appreciate? So one would think that Draghi and Team ECB, they're going to have to say something because they can't actually do something. They need to say something to weaken the euro. Okay. So they're going to have to do something to weaken the euro. That's all. So don't predict the euro to weaken, but look for areas of monthly and weekly resistance where things might change, and then maybe they change technically first because people are setting up the fundamentals. But you're still going to see it technically. So anyways, euro money moving out of Europe and into Switzerland here. And that's a flight to safety. When you get countries babbling like North Korea and the United States and Japan, that's fine. Nothing really changes unless missiles are in the air. If missiles are in the air, buy the Swiss franc, buy the Japanese yen, buy the US dollar, even buy gold. Even dollar and gold will go up at the same time. And you're like, Wayne, that's not supposed to happen. Oh, I know. That's why I'm an idiot. Savant. All right. Kiwi Swissy, we already did it. I bailed on it. Let me zoom in. So you may recall my stop was here. Monthly, Central, weekly S1. I am so happy I bailed on that sucker. Only 200 pips. Okay. Aussie. Aussie. Yeah, we don't care about jobless claims. We've been in like a, what is it, 74-month trend? And these are weekly. We've been, so look, it's going to be on trend. So anyways, looking at this, zing zingariba. That was supposed to be a straight line. Sorry, it still can't do it. There you go. That, my friend, looks interesting, doesn't it? Aussie Swiss. That look good. 4-hour 5-8 cross. So buy it in 2 hours maybe? On the 4-hour, 4H. Pissy. Amazing coincidence, huh? Let me capture this to the pip. There we go. Amazing coincidence that this is the 618. That's an amazing coincidence. Monthly M2, that is predicting a high for the month of August of 130. And we're at 125 and a half, 125. Buy at 125, take profit at 130. How does that smell? Does it smell like Guns N' Roses? I used to get up whenever. It was good on time. That old man, he's a real Euro trader. Gonna kick him on down the line. I used to trade a little bit, a little wouldn't do it, so I trade a lot more and more. I just keep trying to get a little richer. Said just a little richer than before. Whoa. I used to trade a little bit, a little wouldn't do it. Trade a lot more and more. All right. We've been dancing with Euro dollar. All right. Done. Okay. Contrast that with some yens. Leave me alone. Don't leave me alone. Just cleaning this up. Did I hit dollar? I hit, but it says yens. Strange. Well, then we'll go to these yens. This has failed. So got to identify my sell zone. So this crashed on us. Look where it's finding bottom for the week. What an amazing coincidence, huh? That the current bottom was calculated here using math in our little algorithm that says do these calculations, paint these lines on the chart, and whammo, it became a self-fulfilling prophecy. Love it. Because of the failure to make a high, this is a real problem. So we're here now. You know what this is? The projected bottom for the beast for the month of August. I am now on red alert. It's not supposed to happen until next week or the week after. So I'm going to play cautious and cool. Well, it can't be yen strength alert because it's been strong for well, it's been strong all month, let's say. not just this month, but for the last month. So it's dropped from 147 to 142. So it's dropped 500 pips. So it wouldn't be like a yen strength alert, and it's been strong for a while. So I think I know it's only Thursday, but I'm kind of waiting for next week already for yen weakness, perhaps. CAD's supposed to fall here. Look at this funny indicator, huh? Bullish, 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 bearish. It's funny that people need it drawn. Okay, and then Kiwi just destroyed. We're even through the monthlies. We've been dancing, Mr. Brownstone. So you can see I've drawn a break point right here. Okay, weeks ago drew this. This is to show a failure to make a higher high predicts the downtrend, right? So you go into the hourly chart, down, 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 roll reversal short, right? Down, down, down. Now what? Roll reversal short. Then after that, it's just gone. Gone. So that's cool. One of these I did tell you when we were at the ultimate high, when it had been going up for weeks and weeks and weeks and weeks and weeks, we did talk about it not likely to go up any further. In fact, I said don't be shocked if it comes all the way back down, hundreds and hundreds and hundreds of pips. I don't know if it's Kiwi or pound or euro or whatever it was. I said, I know it's hard to imagine and it's going to be shocking, but do not be shocked if it comes all the way back down. Hundreds of pips. Zazi yen, right? If you're a bullish swing trader, it opened above the buy zone, which means you used the moving average, which gets you along here. You're still a bull, obviously. So this counter trend says it'll fall back to the central, and then you buy it there. So there's your entry. Comes crashing down the following week, bullish entry again. Comes back down to the following week, bullish entry again. It failed. So you probably didn't even lose money. And in reverse, If you were a bear, you might have gotten into this, but probably not. You probably would have sold here. Maybe you made money, but probably not. There was no entry on this week, so there's nothing going on. Maybe you sold here because this is your sell zone here, so you probably sold that, and then you probably sold that. And so if you simply traded your bias using a proper trend, you would have been fine. If you're, again, looking at the market, trying to figure out what the market's doing, you've already lost. If you simply did what you wanted to do using technical analysis to find the right price and the right time, then you probably did well. You probably didn't make money on the weeks that the market didn't agree with your analysis, and you probably did make money when the market agreed with your analysis, but you're never trying to figure out the market. The market's just simply going to agree with you or disagree with you. You either make money this week or you don't. Chris says, is Aussie in a downtrend? Well, is that your, let's, depends on your time frame. Okay. So if you're using daily, you're thinking this. Okay. Well, let's go to a 4-hour, and you can make your analysis any way you see fit. So let's do the time warp again. Okay. Does that seem valid? Okay. So mark it up any way you see fit. Trade it as you want. Now, don't forget what pivots are telling you as well. So you might be a bear, but you might need to be out of the market, even though it's falling. But what if you're a bull? Then you got some work to do, right? And that you're probably thinking about something like that. So if you're a bull, you're waiting. See, you're not trying to figure out what the market wants to do. You're like, I want to buy this, but it's falling, so I need to be careful on my entry. Doing my analysis here. We're at weekly and monthly support, so it's not likely to fall further. So for me to consider buying it, I need to get out of the current downward channel, looking for at least a higher high in this time frame, so that I could buy the next dip back at the roll reversal and put my stop down here, because I also have to be cognizant of the fact that when I do want to sell, that we are going to be in a giant roll reversal for a swing down. So being in here, I got to be cautious because this is my zone. But, you know, I'm only risking this bit here, and then we got to tiptoe our way up. So if you're a buyer now, maybe you end up buying here, and you end up buying here, and so on and so forth, knowing where your areas of risk are and knowing where your areas of opportunity are. And since you're completely in control and you only buy at good prices, and you measure things like overbought and oversold conditions, and you know the prices you're interested in, and you're using technical analysis to confirm, you know exactly where and how and why you would buy. And if you're wrong, what happens? The market does this. And you're like, oh, wow, good thing I didn't buy it. Okay? If you're a bear, I think it's quite easy. There, you sell off the roll reversal or you sell off the moving average. And this sell here that you're looking at is like classic right out of my book, you know, retracement back to the 21 and done. Nice little Fibonacci retracement done. Okay? And then if you're a bull, you need a reversal pattern at the very least, being, okay, let's say, so if this, so we'll call that a double bottom, then we'll call that a higher high, then we'll call that a 1, 2, 3, and then you would long off the 1, 2, 3. And amateurs get involved in everything in between, and it gets really messy. But not you. All right, so peace on earth. May the pips be with you. May your profits be above average. And I will see you tomorrow, Friday, the Trader's Way. Throw your diamonds in the sky. Yeah. Mwah.